In Houston, a power summit wrestles with farm subsidies.
Someone coming up to it and just severing California from the face.
In Washington, questions over the trade impact of California's Big Green Initiative.
Hi.
And in the field, small-town bankers cope with the times. Those stories and more, next.
This is the Friday, July 13th edition of Market to Market, the weekly journal of America's largest industry.
Hello, I'm Chet Randolph. It's been an interesting week. The president of the Soviet Republic of Russia is no longer a Communist Party member. News that the U.S. Federal Reserve was mulling the notion of lower interest rates sent the Dow Jones through the 3,000 barrier. And in Houston, the leaders of the world's 7 wealthiest nations met and found at least nodding agreement on the environment, a Soviet financial aid package, and farm subsidies. Agricultural subsidies have been a major hindrance to a 4-year-long effort to overhaul the world trading system. It took hours of forceful argument from Bush to convince his counterparts to accept U.S. demands to cut farm subsidies. However, the compromise offered no specifics on how or when farm subsidies would be cut, and many saw Bush's claim of victory on farm subsidies as hollow.
And we have to do it, and it's a two-way street, and I expect there would be some political opposition, because like many of these countries, we protect. But I am convinced, and I believe Congress would support the concept, that that if we all do this, and we all reduce barriers, and we all make a freer trading system, that the United States can compete.
The president told his summit colleagues he is absolutely committed to pushing Congress to abolish some farm subsidies. House Agriculture Committee Chairman Kika de la Garza said he was encouraged by the summit agreement, but had no intention of dismantling U.S. farm subsidies as part of the 1990 Farm Bill. The plan was opposed all week by representatives of the European community, who said cuts in farm subsidies would put 3 million European farmers out of jobs. In fact, the interpretation of the agreement on farm subsidies varied widely. The White House saw it as a commitment from Europe to eventually make across-the-board cuts in all farm subsidies. The Europeans saw the agreement in more general terms. There's also opposition to the plan from well-entrenched farm interests in the U.S., where the fear is the proposal will undercut the prices paid to American farmers and allow the import of cheaper foods. And while the president insisted U.S. products can compete if trade barriers are reduced and trading systems are liberalized, he acknowledged such a change would require difficult political decisions.
Each of us recognizes that reaching this goal will require difficult steps by all participants. We will not hesitate to take them. This is especially true for agriculture, where we are committed by this declaration to provide the strong political leadership necessary to ensure a successful and enduring result.
Vietnam is enjoying a rice boom. Officials attribute the increased productivity to a 1988 Communist Party resolution that gives farmers long-term leases on land and allows them to work the land as individuals instead of in collectives. It also increased the amount rice farmers can sell on the free market. The growing exports are now fueling the country's economic recovery. Some officials say Vietnam could soon be competing with Thailand and the U.S. in the world rice market. More to come.
On the horizon, the Bush administration has proposed sweeping regulations to require nutritional labeling on all packaged foods, fresh produce, and seafood. Meat and poultry would be excluded, but other foods would be required to disclose the number of calories from fat, the amount of saturated fatty acids, cholesterol, and dietary fiber. Currently, about 60% of foods carry nutritional labels, but labeling is not required except when a manufacturer makes a nutritional claim or adds nutrients. The administration hopes to have the new regulations in effect by the spring of 1992.
The state of Florida, after decades of aggressive development, is now attempting to regain an environmental balance. The Army Corps of Engineers is planning a massive restoration of wetlands. The state is bonding to finance the acquisition of more land for restoration. And now, Florida water managers say they want farmers to pay half the $120 million cost of cleaning up the Everglades. The plan is to cut agricultural runoff and restore water to dried out areas. Part of the farmers' money would pay for farming methods aimed at reducing agricultural pollution. Florida is an example of a state acting on an environmental agenda. Now, on the West Coast, California voters may in November endorse an even more ambitious agenda. But this week, California's Big Green Initiative was the focus of concern for trade officials in Washington. A storm brewing on the California horizon is drawing the attention of Washington and member GATT nations. The object of such focus is the Environmental Protection Act, or Big Green, a sweeping environmental referendum on the California ballot this fall. Part of that initiative would ban 19 pesticides connected with health hazards and possibly prohibit another 36 pesticides if those chemicals cannot be proven to be safe. The ban, which has drawn some criticism for its lack of scientific basis, would also apply to products entering California. In a state with an economy of world-class proportions, such sanctions could dramatically challenge existing international trade law. Proponents, though, contend trade law should accommodate environmental needs.
Well, what California voters are increasingly deciding is that we do not have to choose between free trade and a healthy environment. And the message from these folks today is that we need free trade, a healthy environment. We need a GATT agreement, a general agreement on tariffs and trade, that will protect the environment, that will protect consumers, will protect family farmers.
The ban on pesticides is only a part of Big Green, also known by critics as the Hayden Initiative. The measure would also provide an oil spill cleanup fund, prohibit offshore drilling, preserve dwindling forests, and create the Office of Environmental Advocate. The most heated opposition, however, concerns the ban on farm chemicals.
The initiative is bad for California agriculture and all of American agriculture, using an approach that presumes that public policy can and should predict where science is headed, and then drags our entire economy in a direction that could best be described as back to the future. Imagine, if you will, the American landscape, the geography, outline of the American map, and someone coming up to it and just severing California from the face of the American landscape and pushing it out into the Pacific. And economically and effectively, that's what Big Green will do.
Big Green will be countered in November by another referendum backed by the Farm Bureau, Western Growers Association, and other groups known as Californians for Responsible Food Laws, or CAREFUL. That initiative would, in essence, nullify Big Green provisions intended to eliminate questionable pesticides while leaving other environmental measures intact. The International Trade Commission will conduct an investigation into Big Green and its potential effect on trade, issuing the results of the investigation in late September. 6 weeks of scorching weather had left southeastern farmers wondering if it's 1986 again. That was the year that southeastern farmers had to rely on their Midwestern brethren for hay to sustain cattle herds that were left high and dry and burned out pastures. The weather's already caused the region's farmers to feed cattle hay that's normally reserved for winter. The heat has also reduced southern milk production and the weight of chickens. Corn, cotton, and soybean crops are suffering as well. Stay tuned.
Stat Stuff. The Agriculture Department reports that unemployment in rural America has generally eased since the early 1980s, but pockets of extreme joblessness remain. For example, Starr County, Texas is trying to cope with an unemployment rate of more than 34%. Conversely, Falk County, South Dakota is enjoying an unemployment rate of only 1.2%.
The Agriculture Department keeps pumping out bullish figures about the farm economy. Currently, the department is projecting American farmers may gross a record $168 billion from crops and livestock sales this year. That could be as much as a 6% increase over last year. Farmers, though, are quick to note that those figures represent the total sales of U.S. farm produce. Not all in agriculture will prosper. That's hardly surprising in a diverse agricultural economy. Indeed, the vagaries of the marketplace are all too familiar to rural America's bankers. But as Sarah Frasher explains in a report first filed last spring, small-town bankers are confronted by challenges that reach beyond the marketplace.
Several miles outside of Liberty, Illinois, is this plant. Built to make cubed alfalfa for feed, it has been idle for a couple of years now. 2 miles west of Camp Point, Illinois, is this 20,000-square-foot building. It is unoccupied. This was an empty building on the outskirts of Golden, Illinois. Since the early 1980s, it has housed an electronics firm that employs about 110 people from the area. that those jobs are here was a happy accident on the part of the local banker.
I was just real lucky and happened to overhear some conversations and made some phone calls and got them to come look at the building. Once they did that, then it's just being at the right place at the right time.
That was luck.
Yeah.
And you want some of that to maybe be more planned than just lucky.
Yes. Has to be if we're gonna stay here and stay viable.
One way to try and stay there and stay viable could be something called a Community Development Corporation, known as a CDC. In simple terms, a CDC is a corporation organized and financed by banks and possibly other organizations or individuals that invest directly in local business projects.
Hi.
Specifically, it is a vehicle that allows banks to do more than make loans. For more than 10 years, federal legislation has allowed national banks and bank holding companies to create CDCs. More often, they have been developed in urban areas. Last year, Illinois gave state banks permission to form community development corporations. And in western Illinois near Quincy, a group of bankers are considering pooling their resources and forming a CDC. Included in that group are the Golden State Bank, where Gary Edwards envisions a CDC soliciting small and medium-sized firms from outside the area.
We're not big enough to go after the thousands and the 1500s, but we are, all of us, strong enough to get the 20s and the 30s up to the maybe 200 or 300 people.
At the Farmers Bank in Liberty, Mark Field sees the CDC promoting locally grown cottage industries.
That's the name of the game, is trying to promote the idea of cottage industries. Any type of cottage industry we would absolutely like to see, because that type of thing can grow into a full-scale manufacturing concern.
And at the Farmers State Bank at Camp Point, Arlen Higgs talks about the need to help both homegrown businesses and attract outside ones.
We have to be constantly working on bringing small business and small industry into our community, in addition to helping those people that are already here. That's just as important as bringing new ones in.
Helping develop the local economy is not a new role for the community bank. Indeed, the local bank is as important a part of the rural infrastructure as the local school and newspaper. Given the bank's function, it is pivotal to local development.
The community does rely on reinvestment in people interested locally. It's been proven that when a smaller town, if they lose a bank or if they just had a branch of a larger bank and for whatever reason that branch is shut down, the thing that you don't have anymore in that community is somebody willing to take the risks and invest money back in the community.
The need for economic development is also an old item on the rural agenda. Liberty, Golden, and Camp Point have all formed organizations in recent years to help promote and boost their communities. But those groups are not myopic. They understand that they need each other to prosper. And that is an attitude that has already spawned several regional development associations.
And one thing you'll find, at least in this area, is that there is a more regional approach to economic development, because people, as years go on, they understand that there is an interdependency between communities. There is no one is on an island.
And I think the sooner that a small community realizes that it's not an island in itself, perhaps the better off it'll be in the end to try to work with the other communities.
Working together could in time involve more than a community development corporation. In the future, and it is hoped the distant future, it could mean some smaller local community banks might have to consolidate. That's not just because the communities they serve have changed. The financial services industry has changed dramatically in the last decade or so. For example, there has been a proliferation of non-bank providers of financial services, like credit unions, mutual funds, retail credit cards, or dealer financing of cars and farm equipment. It seems everybody is getting in the money business. Problem is, a lot of them don't face the regulatory requirements banks do.
These are just some of the latest regulation changes, et cetera, that have come across my desk in the last few days. Here's one on Bank Secrecy Act. This is the anti-drug, anti-money laundering. This one's changes in personnel. Now, if
the list goes on and on. Not only do competitors not face the same regulations, but there is a growing mountain of paper to sift through that costs smaller banks time and money.
Community Reinvestment Act.
And some regulations are promulgated with big city banks in mind and aren't really relevant to rural banks. All that, though, is not a call for the elimination of regulation, just a more rational approach.
This one's regulation changes on H and Y, uniform appraisals.
In the meantime, small community banks will continue doing what they have always done, relying on service and convenience, the personal touch, to keep themselves and their communities in business.
I guess my opinion, people, when it comes to their hard-earned money, people want to see the people they're dealing with, at least in the smaller communities.
They all know what time I get here in the morning. They know that I'm in the bank at 7 o'clock and they can call anytime they want, or stop by, or knock on the window and come on in.
I don't feel that we should panic thinking we're going to have 10 or 15 banks in the United States and the small town banks are going to be closed up. I can't see that happening. There's a need. Where there's a need, you're going to have a bank there to take care of the people.
Next, the Market-to-Market Report.
Well, both slaughter cattle and feeder cattle made new contract highs. Slaughter cattle futures were up $1.70 for the week, but hog futures lost 35 cents. As for the grains, corn has lost 30 cents in 2 weeks, falling to the lowest level in 5 weeks, but it closed Friday only a penny lower than a week ago. Soybeans lost 50 cents in 2 weeks, closed 9 cents lower than last Friday, and wheat prices made new contract lows, with Kansas City wheat going below $3 briefly. However, wheat prices finished just 2 cents lower than last Friday. But numbers out this week are hardly encouraging to the wheat trade. The U.S. wheat harvest continues on pace. According to USDA numbers released this week, the harvest for all wheat should yield nearly 2.7 billion bushels. That's virtually the same figure the USDA released in last month's estimate. But while the harvest looks good, the price outlook doesn't. The International Wheat Council reports that world wheat production could set a record in this wheat-producing season. The council forecasts 564 million metric tons will be harvested, an increase of 5% over the last global wheat harvest. At the same time, forecasters expect an increase in world output of coarse grains, notably corn, to 837 million tons. The German mark went up to highs of 9 weeks ago to close at the same level as a week ago. Gold on Friday jumped enough to show a gain of nearly $3 for the week. And the Commodity Research Bureau's Index of Commodities closed Friday at 235, down 0.5 point from last week's close. So here now to lend us his insight on these and other market trends is one of our regular market analysts, John Roach. Welcome, John.
Hi, Chet.
It's middle of July here. What do you see, hot weather coming in anywhere from the west or not?
Well, there are some forecasts for that, but most forecasts are for relatively normal weather through what should be the critical part of the pollination season.
And it seems like there's been pretty good growing weather all around the world for most grains, doesn't it?
It certainly does. If you look at the forecast given to us by the USDA this week, we've had excellent crop harvest across almost the entire world with really no particular spots of difficult crops.
And you brought a chart in that shows us that in spite of that, you think the demand is going to be there.
In the forecast that the USDA gave us this week on coarse grain supplies, you'll see at the end of the 91 crop year, or the fall of 91, that coarse grain stocks are due to be about the second lowest that they have been going back a lot of years. The reason for this is excellent demand. And when you measure this in days of supply, we're to a point where we have to have very good crops, not only this year, but also we need to have good crops again next year.
What's your idea on the U.S. corn crop, recognizing it's been about 2 weeks since the big floods have receded, Do you have a guess as to whether we're going to have an 8 billion bushel crop or not?
I don't think we will. I think that the government's estimate at the 7, 8.5 area is probably on target. If we have any problems from here, then I would expect to see some reductions. And quite frankly, I think the acreage number can come down a little bit, but yields look pretty good right now.
And here again, you feel that the demand is there for the corn.
There's no question that the demand is strong. As the USDA reported this week, you can see that measured in days of supply, we're at very tight levels, about the second tightest level that we've seen in the last 13 years in corn supplies. It tells us that the demand is very good, and that even though the market right now looks soft, that we should have a long-term upward type bias in the corn market.
And on the soybean side, we talked about that drought in the southeast, which continues to get worse. It really is going to affect the beans more than the corn, which actually in the south, the corn's about ready to harvest.
That's certainly the case, and I think that as we look at the next soybean estimate, unless there's some drastic changes in their weather condition there, we're going to see that this current chart getting even tighter. This report showed the carryover for the fall of 91 down from the fall of 90, and if you recall back here just a couple of months ago, we thought we would have maybe near record carryover supplies, and as you can see, we're certainly turning the trend around. This is about the fifth tightest carryover in the last 13 years, with potential for that carryover to tighten even further.
So on the soybeans, you're saying that the supply side might drive us a little bit, particularly the change in the carryover.
There's no question that the supply side is tightening. The demand side continues to be very good, and if you look in the southern hemisphere, where for the last several years total production has been increasing, this year the Brazilian acreage looks to be reducing again because of their economic problems, perhaps more than what the Argentine crop will increase. So we think the southern hemisphere total production will decrease for the first year in several years.
I see. Yeah. Now on the wheat side, it looks like we've got both high supply and low demand, doesn't it?
The supply of wheat is very burdensome. The demand is very slow. Everybody around the world is subsidizing wheat, and until we see subsidies, we don't see much demand, and it looks like it'll be a little while before any subsidies come
John,
free.
even with subsidies, we don't seem to be moving any wheat. Expected sales of 3 million bushels right here at the peak of harvest.
It's just amazing how slow the demand is on wheat, and what we think will happen is that demand will start to pick up as we get through the season. Remember, everybody else has a pretty good wheat crop out there. The competition to sell that crop and to consume their own crops internally are pretty strong right now.
Now, do you have a feeling that 6 months from now this wheat price will look better, or is it just dull for as long as you can see?
I think that the market will bottom here in a fairly normal seasonal pattern, and we'll have some upward move, but I don't see it being a drastic upward move. I wouldn't be selling wheat here at these price levels. I'd put it in the bin and I'd hold back on my sales. I think we'll get some help out of the coarse grain sector, and we'll get substantially increased levels of wheat feeding.
This drop in the corn and beans have left us a little breathless. Are you suggesting any action there for those who might not have sold anything yet?
Well, I think that the pattern from a technical standpoint is showing some bottoming action in corn. The bean market actually held at some critical support levels this week. I think the market will trade in a sideways range and will do better as we move through the crop year this next year. But I think for the next 6 weeks, if the crop conditions continue excellent, we may erode to some lower price levels. If we start to get into some weather problems, then I think we'll go back to the highs we saw here in early July. It's really a weather picture right now, and currently the market has nothing in it for any kind of weather problems.
It seems like an awful lot of bulls that rode the corn market for about 4 months gave up, didn't they, as you see this open interest dropping about 100 million bushels in a week, I think it was.
Yeah, the open interest came off about every day this week, actually started just before the 4th of July. So we've lost all of the excess baggage, if you will, in the market. The market has good fundamentals. We should trade sideways to higher over time, but the next 6 weeks will really be a weather game.
Yeah. Those cattle seem to be doing something. How long are we going to sustain this move?
Well, the cattle market's really surprised a lot of people because we did not have that, quote, wall of cattle everybody talked about. We broke the wall down. We moved the cattle early. We moved them very well through the system. Feeders did an excellent job of moving the cattle as a consequence.
What evidence do you have on that?
Well, the numbers that we've been killing and the weights and the condition of the cattle. These cattle are going to town just reaching the choice grade. We're killing underdone cattle. We've been doing it now for about 6 weeks. And besides, the calendar says we have passed through those numbers that were so burdensome. And we've done it with extremely good demand. The packers making pretty good money now. The live market actually led the futures to new contract highs this week. We think that the cattle market's in pretty good shape.
Are you looking for a real run or just firmness?
Well, we've already had a pretty good run. I mean, when you run up to new contract highs, we think the market can inch a little bit further yet. There is resistance, $1 up in the market, and so maybe that'll stall us. We're coming into that tough time of year, the dog days here of August, if you will, but we can see around that period of time and see some strong markets.
But with the futures in the fall, why, looks like we've got some months ahead. Do you suggest doing anything?
I think at this point, if you're feeding livestock, you need to continue to utilize puts to get some insurance underneath them. But quite frankly, I think they'll be as the puts have been. They probably will not be profitable puts. They'll probably end up just costing you the money of insurance.
And the feeder cattle are gaining by the good pollination weather, aren't they?
Well, the feeder cattle have had excellent demand on them. The corn prices coming down has continued to hold the demand, as well as excellent pasture conditions.
Over on the hog side, a little on the weakness, on the weak side, and I believe weak in the product side too, aren't they?
Chet, the product this week just fell out of bed. We had extremely strong loin prices coming into the beginning of the week, and the product lost in the neighborhood of $3.50 hundredweight. So the market had to follow it down. The market's really pretty disappointed. We had a friendly hog and pigs report, and we've not been able to muster any kind of strength since that report came out. Quite frankly, our numbers are going to be down in the neighborhood of 2 to 3% below a year ago, and a year ago price levels were in the mid-40s, and the market's kind of struggling a little bit when we look forward in the fall and talk about low 50s, and here we are in low $60 prices. The market's having a tough time being able to go up much. In fact, as we're probably in that period where we start to gradually erode, although I don't think it's going to fall out of bed quickly, gradually erode to fall lows.
Boy, when markets turn, they're awful hard to reverse, aren't they?
Particularly when they turn from record high levels.
Yeah, that's true too. Now, are you suggesting that you ought to take action right here, or you think you dare wait for $1 or $2 up?
I think you wait for $1 or $2 up, and then I think you selectively sell into the market. I don't think there's a train wreck out ahead. I think we're simply into a seasonal decline starting another 4 to 6 weeks out.
All right, fine. Thank you, John. That wraps up this edition of Market to Market. Join us again next week when we report on the challenges facing one of rural America's institutions, the country elevator. Till then, I'm Chet Randolph. Thanks for joining us, and have a good week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Major funding for this program was provided by the Central Educational Network, the Corporation for Public Broadcasting, Friends of Iowa Public Television, and this and other public television stations.